Crude oil prices plummeting today again, and just days before the OPEC Plus meeting was supposed to take place. It was delayed. Saudi Arabia's dissatisfaction with other members' oil production levels pushed the meeting to next week. This is according to a report by Bloomberg. Now, Goldman Sachs is predicting a 35% chance of additional OPEC Plus output cuts to keep the price of Brent crude falling below $80 per barrel, and that's their estimate. What can we expect from the OPEC meeting? Scott Bauer, Prosper Trading Academy CEO, is here to tell us more. Scott, thank you for joining us here today before Thanksgiving. As we were talking about OPEC Plus, supposed to have a meeting. The joint ministerial maybe got in the way. What are you reading in the tea leaves here? What do you think is going on behind the scenes?
Well, it certainly seems to me like the dissension amongst the members of OPEC Plus is there, and that dissension probably stems from some of the members not wanting to continue cuts because they want to get market share back, and B, led by Saudi, wanting to extend those cuts, perhaps much deeper into 2024. So I think they're buying time to hash that significant piece of the puzzle out before they get together. So the market is looking at that, obviously, with this dip that we're seeing today around 4% or so. The market's looking at that as, there are members here that maybe want to pull back on those cuts.
So when we talk about what the downside could look like here for crude, we're looking at 5 straight weeks in a row potentially of losses. Right now we're sitting just below $75 a barrel. How much downside do you see from here at these current levels?
Yeah, I don't think we can really trade much lower than the 70, maybe 68 number or so, because you got to keep in mind that the U.S. government is out there, and they will be resupplying or hopefully reloading up on the SPR. They've already said that initially that 68, 69 area is somewhere that they want to start buying crude. So I think at least in the short run, that's pretty much the limit to the downside here. But fundamentally, if we look at a bigger picture, it's a different story. Right now, the demand outlook is not very strong, not just here in the U.S., but globally, specifically in China. The narrative, the rhetoric has really shifted from the post-pandemic reopening where, there was all of this intent and all of this forecasting for major demand. That has come down quite a bit.
Scott, just want to shift gears a second to another commodities market, namely gold. We've seen that flirting with the 2,000 level quite recently. And on your screen here, I do have a 1-month look back on our heat map, and I'll see if I can find gold here. But in the meantime, what's your outlook here? We've seen a number of analysts say, well, if it punches above 2,000, and here we have that chart, well, then it could get to 3,000. But that seems to be a real sticking point here. It's just camping out at those highs.
Yeah, there's a lot of push and pull here. Number one, obviously, the geopolitical events, is keeping a tailwind, if you will, behind gold as that flight to safety. But on the other side of things here, if you continue to see the dollar soften and if you continue to see rates come down, that could provide a big tailwind as well for gold. So that really could catapult it. I don't know about 3,000. I think 2,100 is really in the sights here. I think we'll learn more at the next Fed meeting, which is only about 3 weeks away. We got Powell's speak yesterday from the minutes from last meeting, but I think we're going to see more. And if it is still a dovish outlook, and if the bond market continues to rally and yields come down further, that is going to provide these tailwinds here. And I think we could see 2,100.
Scott, getting back to what you were just saying a minute ago when it comes to crude prices, what's the impact then on gas prices? Because yesterday we spoke to Robert Sinclair of AAA. He's the Northeast Senior Manager there. He'd said that through a survey, $3 a gallon is still the pain point here for consumers. We have seen pressure on crude prices. Is that going to push gas prices, do you think, below $3 a gallon?
Well, so there's a little bit of a disconnect because we have seen pressure on crude. We've seen supplies actually ramp up. But for gasoline distillates and supply in gas, it's not the same as crude right now. There has been more of a demand there, and those supplies are not there. And that's why we're kind of holding levels that we are in gas prices. Now, they are down significantly from where we were just a month ago. I know where I live in the Chicago area, we're paying about $3.30 a gallon or so. But you would think those prices would be lower with the big dive that we've seen in crude, but we haven't seen that because those inventories are still pretty low in gasoline distillates, and the demand for gas is still there.